morning, everyone. Today I will start with looking at the long-term picture in the S&P 500 index. We clearly seen a breakout of the 2015 highs, which confirms that we are in the final stage of a very mature and prolonged bull market, which started in March 2009. Wave 5 of the bull market is usually characterized by very high volatility and selectivity, and I'm expecting to see throughout 2017 and to early 2018 that theme dominating. Instead of expecting large, broad index gains, my price targets are actually very modest. I think the S&P can go to 2,400, maximum 2,500 in the next year and a half. And I'm expecting to see sector rotation rather than the rising tide lifting all boats. So it will be pretty much a trading year, and I wouldn't be shy taking profits once we see stocks hitting overbought territory. And if you recall my last pieces over the past 3 weeks, we almost closed all our long positions that we have been opening since September. The reason for that is that in the short term, the market is indeed well and truly overbought, and I'm expecting to see a tactical correction for at least a month or 2 months, where we will see the market coming to a more reasonable level. And then I am getting quite excited. I think we will see a very strong rally into the second half of the year, which we will start monitoring if it's going to give us some tentative signs of topping. So I want you to just have a look on the 20-year chart of the S&P that I'm showing on the screen. Why I'm bullish at the moment, I'm not expecting to see the market topping now is because we don't have that sign yet. I know that wave 5 of the bull market is going to be the shortest, but we still think that we are going to have a very strong year ahead. Usually market tops, every analyst uses different indicators, but I use the leading RSI indicator to give me a clue if we are approaching such a top. So I've highlighted in red here the market top. So I'm watching very closely the last support of the RSI. And as you can see, at the market top of 2000, once we broke the little triangle, our warning that the market is topping came right on the top. In 2007, we had a very similar situation. The volatility was very high, and many analysts were expecting that the market topped in August 2007, just to see all that selling being washed up, and the market actually topped in November that year. Our indicator here still stayed in its previous support. So in November, pretty much at the high, we had a confirmation that we are topping. We had a scary moment last year. Our support was broken. We didn't get into a bear market, but we had a really healthy 13-14% correction in the market. And at this point of time, looking at the RSI, I still see plenty of room on the upside. Therefore, I'm very comfortable that we will see higher prices globally, not just in the S&P 500. We already saw sector rotation, as I've mentioned before. We've seen significant volatility in the utilities, in the rates, in the telcos, and into the healthcare. And we've seen a massive boost in financials, energy, and resources. And given that we are in a reflationary cycle, I'm expecting this theme to continue in 2017. I know financials are quite overbought at the moment, but I don't see those reversal patterns that I show you in the S&P, in the banking sector, and in the financial sector as a whole. So I'm expecting to see a really deep pullback in the next month or two, just to unwind the overbought territory. But from sentiment point of view, it feels like the herd will step in and it will chase the market and push it higher. So I'm expecting to see at least another leg high in the financial sector before it tops out. So I will be looking to buy the banks on opportunity, but it is too early yet. I think the earliest it will be in sometime in February, maybe early March. The resources sector, the energy and resources are my key call for 2017. Oil, I'm very bullish on oil. My price target is $68 over the medium term. Resources will do quite well. My price target on copper is $3.80. Iron ore is extremely overbought, and I'm expecting to see a very deep correction in the next few months. But over the year, 18 months, my official price target is $95 based on the large bottom that we have seen. Outside those teams, of course, there will be plenty of opportunities with stocks outside those sectors. I would be looking at the high growth stocks. That's the reason I didn't close my long position on Domino's. And with reporting season kicking off in a couple of weeks, it will be very interesting time how those stocks will fare. So just to move into our markets, I'm lifting the price target on the XJO to 6,000 as well. As you can see on the daily chart, we are trading in a very strong uptrend channel, extremely volatile bull trend with deep corrections on the way, which made us lose and gain confidence over the past 7 years. However, we are still in that final stage, wave 5, as I've mentioned in the S&P, which can bring the XJO to at least 6,000 points, and that level can overshoot. I don't see any reversal signals on the weekly and on the monthly charts, so I'm quite positive that we will see strong buying support in our market. So my three calls for today outside the sectors I've been mentioning. First is Reliance Worldwide. We've seen a very strong decline over the past 2 weeks, and currently the stock is approaching key support level between 275 and 285, which in my view it's pretty solid and is likely to hold. So in the next couple of days I will be keeping an eye on that stock and buy around the before mentioned levels. My price target is very modest, is 325, but over the long term, that level can be exceeded significantly. The second stock of interest is Michael Hill International. We've seen a very strong decline since September last year, but clearly a support around $1.20 was found. And actually, the encouraging sign that we saw on Monday is the break above the minor resistance of $1.40, which gives me extremely high confidence that the stock has bottomed. Ideally, I would like to buy that name around $1.25, $1.30, and my price target is $1.60, which is a medium-term target. Over the long term, we can most probably see the stock trading again at around $1.80. Another stock that we actually don't cover in the research is Treasury Wines. I really do like the chart. It's extremely constructive, and we've seen a quite good consolidation over the past few months. Why am I excited about that stock? I've seen the downtrend, the medium-term downtrend line on the RSI broken yesterday, which tells me that there is extremely high probability that Treasury Wine will break above its key resistance of $11.57, which will offer a price target $12.50 in the medium term based on that breakout. I am very happy to buy the stock before it actually breaks, given the strength and the leading nature of the RSI indicator, which works with extremely high accuracy. And the last stock for today, if you need any more funding idea after selling all the banks and the resources, is APA Group. We've seen a very strong bounce over the past few months. Similarly to the top reversal patterns in the RSI I showed you on the first slide on the S&P 500, now I have a confirmation of an inverse head and shoulder in the RSI, which tells us that APA group is well and truly overdue for a very deep pullback from here. My first price target is $8.10, but over the medium to long term, we can see lower levels than there. So 3 key stocks for today: buying Reliance, buying Michael Hill and Treasury Wine, and we are using APA as a funding source. Thank you.